again, like you said, the boogeyman for Fed is not inflation; it is deflation. That's what they're really afraid of. And at this point, especially after the meeting yesterday, I think they've committed to doing anything it takes to get away from deflation.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Uhl. Why trade alone when you can access over 100 years of trading experience right at your fingertips? Simple strategies, proven tools, real-time alerts, and an interactive trading community await. Keep it simpler with Simpler Trading by visiting their website at simplertrading.com and check it out with a $7 trial today. That's at simplertrading.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special guest online, Sam Shames from Simpler Trading. Now, Sam and I, we were talking just beforehand that there was a Fed meeting last week. And if you're anything like me, you probably don't watch the news. So I literally have no idea what happened at the Fed meeting. But Sam says it might be interesting to know about, especially considering that we are in the finance realm. So Sam, tell us exactly what's going on out there. What's old buddy Jerome doing these days?
Yeah, thanks, Chris. So they had the meeting yesterday. The expectation going into the meeting was that Powell would announce something that was allowing for more inflation. So the mandate that the Fed has had for a while has mandated right around 2% inflation. And, inflation just meaning they have a basket of things that they measure and how rapidly the prices are rising. They target 2%, but they consistently have not been able to get that number. So in the meeting yesterday, they basically said that they're going to take additional steps to try to create that inflationary push going forward and actually push inflation potentially even above that 2% threshold.
So you're telling me that all right, so this is a problem I've had with the Fed's 2% inflation for a while, right? You can't tell me, you go look back at the price of anything in the last, 5 years, 10 years, and say that it's only gone up 2% a year, right? And then they base that, what do they base it on? Like housing? No, it can't be housing. It was like rent prices or something like that.
Yeah, it's a basket of selected food items, clothing, transportation, and conveniently they leave out the housing aspects of it.
Right.
Basically, all the places where you would see inflation are not really included.
Right. So that's a thought I've had, and it's like, all right, they have this 2% inflation that they quote can never hit. And we want inflation, really. And from the audience, like from your perspective, you're like, why would we want inflation? Well, it's because that means that like people are purchasing things, right? If there's deflation, that means nobody wants to buy it because they think it's going to be worth less tomorrow, which really exacerbates it. It's a self-fulfilling prophecy right there, and it can spiral out of control very quickly. So you don't want deflation. I mean, you want some sort of inflation to say that the economy is working. People are wanting to buy now because they do anticipate it being more expensive in the future. So with that out of the way, the Fed is saying that they don't think they can hit 2%, so they want to go higher, like 3%. Is that it? Or they're cutting their limit to like 1.5%?
No, they're trying to go higher. So they
Okay.
like you said, they actually haven't hit the 2% mandate in quite some time. So they're instituting policies now that are going to allow them to go higher in terms of inflation, and they're not going to try to blunt it at 2%. Like you were saying, it's showing up in a lot of different places. It's showing up in, primarily in stock prices, home prices, food prices. So pretty much all
price of this and the price of that and the price of this too.
Yeah, I mean, it'll show up everywhere because essentially inflation reduces the value of the unit that we're using to measure prices, right? Mm-hmm. So it gives the illusion, and that is, let's just call it what it is, what the Fed wishes to create is somewhat of an illusion of prices. Because, again, like you said, the boogeyman for Fed is not inflation, it is deflation. That's what they're really afraid of. And at this point, especially after the meeting yesterday, I think they've committed to doing anything it takes to get away from deflation.
This anything it takes mentality has been thrown around for a few years now, right? And that concerns me, right? We're fortunate enough to live in 2020, which has been all kinds of hell breaking loose. And the thought that they have to continuously go back to a like whatever it takes mentality, I mean, that concerns me, right? It's not like, all right, things are easy. We're just going to push a couple buttons and we're going to just keep on going. Everything's fine. So given that, right, what can the Fed do in this case? And I mean, is their only goal to make stock prices go up here? Like where are they coming from with that?
Yeah, so it does seem that way, right? I could, from an outside and even an insider's perspective, it does appear that their only real goal is to get those stock prices higher. In effect, they're trying to, not to get too abstract, but they're trying to they're trying to affect the psychology, right? Because like you said earlier, if deflation starts to hit, it affects mass psychology, and so folks start to pull back and they start to wait for those lower prices instead of chasing those higher prices higher. So in large part, what they're trying to do with the inflation push is just keep those prices high to keep people in those assets so that they don't sell and create a real gnarly kind of feedback loop like we saw before, especially in the credit markets, right? So if they can keep the stock prices elevated, that'll keep the bond market, the credit market relatively contained, and that's really where the potential problems could be. Speaking to the point that you made about them having to do whatever it takes, the problem with that is they continuously have to up the bar.
Exactly. Right? Yeah.
It's just like getting used to anything, alcohol would be a good example. Your tolerance would keep going up and up and up, and so you'd have to continuously push that limit. The problem is when and if they are able to unwind that. How do you unwind anything it takes, right? You can't really pull back from that precipice. So that's really the eventuality is going to be that problem.
That's the exact thought. Yeah, that's the exact thought that's been going through my mind, right? And like you said, it's increasing the tolerances. It's increasing. It's a rubber band, right? We're stretching. At some point, will it pop? And I don't want to be around for that, Sam. I don't want my kids to be around for that. Dadgum, Sam, we need some good news, all right? What are we going to do around here, okay? We got to figure this out. We got to keep all of our stock prices going up. We got to keep all of our, consumable prices going down. I don't want to pay any more for milk. And I want, okay, so let me list off everything. I want my house to go up in value, but everybody else's houses to go down so I can sell my house and buy cheaper houses. Exactly. I don't know if this is going to work out for me, Sam.
You want 50-cent gas and $5,000 Tesla.
Exactly. Yes. Yeah. All right. So my dream is out the window now. So what are we going to do about it?
Well, from an individual perspective, in ways of protecting yourself are really to try to diversify around the dollar. I know it's not super realistic for a lot of normal people to do that, but just some ways that you can do that. Things that will benefit from the inflationary push are obviously gold and silver. Metals are going to, as they absorb, in a way, inflation, and stocks as well. So one thing that a lot of folks don't consider, they'll consider gold and silver, but they won't necessarily consider stocks. And stocks actually will absorb a lot of the inflationary push. So like we were talking about, a lot of this will end up back in the stock market, in real estate as well.
So I don't think many people consider that stocks and gold would really work together in that way, right? Because my first thought is gold's a defensive asset. If I'm going to a defensive play, why would my offensive play? I can't play both sides of the field, can I, Sam? Is that possible?
In this instance, it is. Yeah. So gold is traditionally a defensive asset. Most recently, it's been having a little bit of offensive properties to it. So it's kind of shifted away slightly towards the middle there. If you look at what happened with Venezuela, for example, so Venezuela managed to create hyperinflation, and then if you look at their stock market, it never did better. So in effect, if you're defending from inflation, then stocks actually offer defense. You know what I mean? So if inflation is kind of the opponent, it'll go both into metals, which is one of the more obvious plays, but then stocks will offer defense in that instance.
Very interesting. Okay. And the last time you and I spoke, you were saying anytime gold's below 2,000, consider it on sale, right? And I think we're right below it today, right? Or are we right at it? 19 something.
19 and change. Yeah.
Yeah. Yeah. So, all right. So that kind of plays into that thesis there, right? So with gold being a little bit underpriced at the moment, with the expectation that there will be, I mean, the Fed basically said we're going to have more inflation. So, I mean, that's not an assumption anymore. That's now an expectation, right?
Yeah, and they basically they can turn up the printing press to create that inflation if they so choose.
Look, if they want to print all they want and drop it off at my house on a big pallet, I'm good with that. But I'm not sure I want it out in the economy where it ruins the value of the dollars I already have on pallets at my house.
Absolutely. Yeah, and that's the problem with inflation. The classic problem is that they create these new dollars. The folks that touch the dollars first, which is the banks and the big money, they put those dollars into assets, and then by the time the trickle down effect happens to everybody else, the asset prices have already gone up, and the effect of the addition of the new money is blunted. So it's kind of a catch-22.
Yeah. My father-in-law, before he passed away, I think I mentioned this last time, he was a gold bug. But one thing he said, and he always applauded me for it, he had 4 kids, and I married his second daughter. And one thing that he always loved about it was I was in the, quote, money space, right? And he was like, Chris, you know what? You're so smart, because the closer to the money you are, the more you make, and you're the closest it comes. So yeah, I think this is a good place to be for us active traders, right? And you can be an investor in these things, and just be aware of what's going on, because at some point it'll turn around. And man, I'll tell you what, I was just going to say,
stay nimble too.
You have to stay nimble. Precisely. That's where I was going. I've seen financial gurus, you could call them, on YouTube, and of course they're competition to me. So anything they say is wrong compared to me. But one of the things they do, which drives me up a wall, right? All right, so I'm going to go off script here for a minute. Drives me up a wall is they're like, oh yeah, I'm an investor in this, so I'm totally fine if it loses 30%, 40%, or whatever, because I am holding it for the long term. And I'm like staring at my phone, and I'm like, what's wrong with you? If something's lost 30%, you're not only wrong, you're really wrong. And you should have done something about it a long time ago.
Yeah.
So with that being said,
absolutely,
I think that people should be
cruel. The math is cruel for that type of thinking, because if you think about the math there, let's just use easy numbers like 50%. If somebody says they're okay with losing 50%, well, okay, if you lose 50%, now you have to make 100%.
Yes, it now has to double. Even. Yeah,
it has to double to get back to even. Yeah,
so and that's a tough boat.
The math is brutal.
Look, unless it's the Qs between March and now,
right?
Which I kid you not, or Tesla.
Yesterday and today.
Yeah, I was looking at some charts just the other day, and in my platform, you can like pick point A and point B, and it'll tell you the percentage change across there. And I did the Qs from the bottom to now, and it was like 75%. I was like, wow, I didn't realize we're up 75% in like 4 or 5 months. That's crazy talk. Yeah. But you know what? With inflation coming, probably going to be 75% more every 5 months. This is going to be awesome, right?
Yeah, for sure.
Sarcasm. That's not trading advice.
Yeah, I mean.
Oh, I'm sorry. I just had to put a disclaimer there. You're good to go.
Totally understood. It's you do want to be cautious. You want to be nimble, but at the same time understand that the inflationary push is a really big tailwind for a lot of things. So don't fight the trend.
Yeah. The last 2 people I've had on, that's pretty much what the takeaway has been. There is a trend in place right now. Nobody knows when that trend's going to change. And it would not behoove you to spend your money to try and call the top or call the bottom of this trend, because it's going to go on. What is that adage? It's like the market can stay irrational longer than you can stay solvent.
Exactly.
Yeah, I've been there. I don't want to do it again.
We've all fought that. Yeah, we've all fought that battle.
All right, Sam. I appreciate your time today. The takeaway here is we should be expecting inflation. the Fed has said it's coming. It's no longer an assumption, but an expectation. And plays for that could be long stocks and long gold, right?
Yeah, absolutely. I think those are the easy plays. You definitely want to try to avoid bonds here. We got out of bonds at Simpler Trading 2 or 3 weeks ago, very close to the highs, based on this dynamic. So I try to avoid things that are fixed assets, like bonds, because inflation is kryptonite for that. But the flip side is that stocks will love it.
You know what? On that topic, so I've been out of bonds for a hot minute too. But I was looking at it the other day, and I'm like, what's going on with bonds? Because like the traditional safe portfolio is, what is it? It's like your age, 100 minus your age in bonds is the safe play. But like that's a pretty bad play right now if you're 75.
Yeah, it's a bad play if you're 25. Bonds here didn't have a lot of room to go lower, or excuse me, rates. I don't want to make it confusing. Bonds didn't have a lot of room to go higher when they were already at zero, right? Basically, so any unwind or increase in the rate, or if bonds start to drop, essentially, can be pretty brutal. So I think the safety play, which is traditionally bonds, is actually somewhat risky here.
Man, this is we're very fortunate to live in 2020. Let me tell you, 2020 has been a year.
Time.
I've written a short guide on how you can use the Triple Stock Profit system. It's the secret weapon every investor needs right now to change your financial future, and you can get it for free by visiting TripleStockProfits.com or in the links below. Also, if you want to join a community of traders just like you, you can get free access to the Elite membership that has even more resources to help you trade faster and trade smarter. Well, Sam, I really appreciate your time today. This has been a good chat and very informative. I definitely need to hear what was going on in the Fed, and definitely for the audience as well. So thank you for your time on that.
Absolutely. Happy to be here.
Hey, I look forward to having you back on. And I also look forward to the audience going to simplertrading.com to learn more about Sam and everything that they do over there. So Sam, thank you for your time, and thank you guys for tuning into today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode.